Hello and welcome. I'm Jonathan Beale, and this is the ASB Investment Podcast, a show that keeps you up to date on the market and helps you make smart choices with your investments. Now that the New Zealand election is done and dusted, Chris Wilson and Chris-Tennent Brown join me to talk about why we didn't see much of a reaction in the markets. Should we expect the same from the US elections? We also talk about what investors are doing, are they taking on more risk, and what's up with the housing market. These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB that'll be happy to chat if you need. Well, welcome back to the booth. I don't know about you, Chris-Tennent Brown, but I'm very excited that we're back in the booth on Franklin Road. Good to be back.
Yeah, amazing, isn't it? Six months since we were all in the booth. We've been doing it over telephones and internet connections from home and all that sort of stuff, and here we are. It certainly sounds a bit crisper, hopefully.
That's great. And to celebrate, we've got another Chris Wilson, number 2, in the booth as well. You've been here before, Chris.
I have been here before, but no, it is very nice to be back as well. And so, it'd be good to share some insights today and hear what's going on in the markets.
Exactly. I understand you've got a big day on Sunday. You're doing something that not a lot of people do. Some people do, but tell us about what you're doing on Sunday.
I'm going to run the ASB Auckland Marathon on Sunday, which will be very exciting. So hoping to survive, I think, is the aim for the day.
Do you have apart from surviving, do you have another goal? Do you want to win it or break a certain time, or what's the...
My daughter is, she's pretty sure that I'll go well, and I may go close to winning. Obviously, with COVID and the lack of internationals coming into the field this year, I think that should help. Exactly. I think there's at least probably 500, maybe 1,000 people ahead of me. But apart from those guys, I think I'll go okay this year.
Good on you. And Chris, are you doing it?
No, I'm not going to do it. Okay. I probably haven't run any further than trying to catch the bus in the last couple of years. I'm more of a cyclist than a runner.
Right.
But good on you, Chris. And just to fill you in, I think last time you were on the podcast, we were talking about Trump and low interest rates. And
nothing's changed then.
Yeah, so over the year or so since you've been here, that's pretty much all we've been talking about.
Pick things up from where we left it.
And Chris, you've been doing a bit more flying, and you've passed your test or something? What's happened in the last few weeks since
I'm
you first met?
Slowly ticking off the boxes for my commercial pilot's licence. I passed the big cross-country exam, which is one of the 2 big flights you have to do to be a commercial pilot, and I'm studying aviation law and aviation medicine and doing exams and that sort of stuff. So this doesn't mean I'm going to quit being an economist and suddenly start flying people around in Air New Zealand, but hopefully it means that I can maybe teach someone how to fly one day.
Fantastic. Are there many economists who fly?
Well, actually, the Reserve Bank governor was a pilot in Australia, Glenn Stevens. Yeah, and he was a very keen pilot. So there's one economist that was a better economist than me and a more qualified pilot.
Surely not a better economist than you, but
no.
I think I recall you saying one time there's an economist in New Plymouth, lives at the airport. Is that correct?
Well, there's Bernard Hickey lives at the airport.
But does he fly, or he just...
Sorry, not Bernard Hickey, Jim Hickey. Economist Weatherman, easy to get them mixed up. Yeah. So, no, that would probably be a dream of mine to live at the airport. And actually, one thing I saw, like we can talk about property later on, because the property market's heating up.
It's hot.
The Wellington Control Tower's for sale, the old one, not the new one that's at the airport, but the old one up on the hill. I thought that would be a great piece of real estate.
And so you can actually live in the control tower up on the hill?
You've got a prime view all over the airfield, which I think would be fantastic, although I wouldn't be surprised if it got bold and, dozens of apartments built on the site. That seems to be the thing that's going on in property these days, is slicing up big sections and turning them into... townhouses or apartment complexes.
I definitely think, though, Chris, because you meet a lot of customers, and every time I've been to a customer seminar or meeting with you, they never ask me any questions. They always want to talk to you rather than me. But I just think we should do a giveaway, get to fly spend a day with Chris-Tennent Brown learning about markets, and then you could fly them somewhere. That would be we could raffle that off, and I think we'd get a lot of people buying some tickets.
Yeah, well, if they didn't want to come flying, they could just come and help me put pot rivets in the Spitfire in the garage. That project's taking a long, long time.
All right, so we could talk about flying and marathon running for forever, but let's maybe talk about, there's so much going on at the moment, and let's just pick on a couple of, we obviously want to get to Trump and US elections, but we have had an election here in New Zealand, and probably kind of the outcome we thought we'd get, but how have markets reacted, and how has that sort of landed in your world, Chris?
Well, the first thing is the result was broadly along the lines that people expected. It's a first time we've had a government that pretty much on election night we go, you're going to be able to govern alone. You're not going to have to do any trading with the other parties to get a result, or even if there's been like the previous election where you go, well, we could have a centre-left or a centre-right government the way that the numbers stacked up. So this was a pretty easy one that on election night we go, well, it's going to be Labour, and they don't need anyone else. So there's no need to compromise any of their major policies. And tax is probably the big one that people think about. But I actually thought that Labour was pretty clear in their view on tax in the run into the election. And of course, we had the big review of tax a couple of years ago, and it got really put aside. So we weren't looking at this as something that, beyond the uncertainty of a few weeks while you form a government, was going to be a major game changer for New Zealand, which is not the same for the US. So not much reaction, not much surprise, but that's an understandable result. And I think the other thing in New Zealand, when we look at the extremes offshore, we're a pretty centralist country here. Labour wants to put in a higher top tax rate, but it's still lower than the top tax rate in Australia, so you could hardly call it aggressive. Yeah. So the policies are sort of more fine-tuning of a fairly central way of doing things. And so we typically don't change our forecasts too much around an election or our expectations of how markets will go here in New Zealand. And the previous election where we thought, hey, we could get a different tax sort of set up under this, or the one before that when we talked about a different monetary policy system, those are the things we think, this could change the outlook a little bit. But this election, I don't think that there was anything that would have changed the course of what New Zealand needed to do over the next year or two. And so I think now that the result's behind us, people are going to get on with it. And they certainly are. If we look at things like the housing market, retail sales and that sort of stuff, it feels like the economy's ticking along really, really well.
Well, let's just jump into the housing market, because it's just bizarre, isn't it? That we were talking about recession, global pandemic, lockdown, people getting, government paying out and borrowing billions and billions of dollars. And here we are now with the house prices just going nuts, really, isn't it? It's just, how has this happened?
Yeah, it is amazing. When I look at how worried we were back in March, and we thought the economy could be in a really big hole now, and unemployment could be much higher than what it is. And actually, who knows what it is? I was amazed in the previous quarter's result when it came in, it was still 4%. But of course, the answer to why things are going well is the sheer volume of support. The amount of money that the government's putting into the economy to support businesses and to support people that put money into strategically placed money in tourism operations, the wage support and all that sort of thing. So the big test for whoever gets in or whoever won the election is always going to be what next? How do we manage through this transition from the huge amount of money we spend to the economy getting into whatever the new normal for the future is, and how does the government manage things like opening up the borders? So, that's still the bit that we've got to do. But it's quite good in my view that whether it was a national government or a Labour government, you've got a party with a clear majority and a mandate to get on with it.
Yeah, the market really does need that confidence post an election. I think they talked it as the COVID election, and the support for Labour was indicative, I think, of how well people have responded to what they've done around COVID, wasn't it?
Yeah.
But you're looking to buy a house, Chris, and what are you seeing? It must be just seems to be going up and up, and people just, I don't know if they're people coming back from the UK or overseas to, what's it like on the ground floor trying to buy a house at the moment?
Yeah, and on the ground, I think the serviceability of mortgages, just with rates where they are, is much more attractive. And so we're seeing a lot of first home buyers come into the market because, they can afford and compared to rent with rates around, 2.5% at the major banks. And I think one of the banks went down to 1.99 recently. Your ability to service a mortgage and with the expectations around rates staying low is much better. And so you're seeing a lot more demand. And, it does make it tough. And obviously, you see a lot of media around how strong the housing market is, which then pushes up on vendor expectations as well. So, you still do see some properties and see properties pass in, but that's because the vendors have got a really high expectation on price, which, they probably then meet a month or two later anyway. So, it does make sense in some ways.
I do worry though, it's gonna blow at some point. Surely it has to, doesn't it?
Yeah, the thing I never like is when the economic momentum's getting picked up by just people borrowing more money and buying houses. It's businesses going well that I want to see. And of course, these low interest rates are helpful for businesses too. But it's in some ways, for me, it feels like a bit of a sugar rush when you're just going, hey, well, the housing market's really busy and consumption's picking up off the back of it. But when people are confident in their jobs and people have got more confident in their jobs over the past 6 months and more confident that the economy is going to go okay, they then become more confident about taking on debt and upscaling their house or whatever it has to be, or first home buyers like Chris mentions. Confidence in the labour market's a key part of that. Combine that with interest rates that are much lower than what we expected to see at the start of the year, and it's quite a game changer. I mean, it was only back in February that the Reserve Bank met. They had the official cash rate at 1%. Mortgages were well north of 3%. And even though we knew COVID-19 was starting to play out in China, the Reserve Bank was comfortable being on hold, and we thought maybe that's it. Maybe that's the trough for interest rates. And here we are, and within our forecasts, we're thinking, okay, we could well see sub 2% interest rates over the coming months and year, at a time when the unemployment rate is not too high. Now, with all this flamboyant talk about how well things are going, it's worth remembering that the economy is still ticking along at 95%. We've still got a lot of businesses in the hospitality sector that are doing it really tough. Anything around the CBD that relies on a lot of foot traffic from tourism. The tourism hotspots are still really, really suffering, and Kiwis are doing their bit by travelling like they always do, but there's still some parts of the economy that are really doing it tough. But there's other areas that are going incredibly well now, and so it's a really unusual mix.
And what are you seeing like in retail sales? I was in Commercial Bay on Monday, just wandering around, and there was just a handful of people. Those shops were designed really for the cruise ships coming in, and it's just. I just wonder, is retail sales picking up, or is it struggling?
And the answer is it depends, and everyone loves when an economist says it depends. But I think that the Commercial Bay and the CBD is a good example where we're missing tourists.
Yeah.
And Auckland picks up a lot of domestic travel as well, and it's for things like coming up for rugby games, for concerts, and all of that sort of stuff that hasn't been able to happen over the last few months. It's the cruise ships that would normally be arriving right now, dropping off 5,000 people to come and shop in Auckland for 24 hours. That's the hole in the market, and the cities really, really feel that. The other thing which is happening in the cities, and we see this at ASB, is even though we've come back to alert level 1, people are slowly coming back to work. But speaking for myself, I've developed quite a good routine of getting all of my meetings done at home. So that's a day a week that I don't come in.
Getting up late.
Yeah, getting up late, walking around in the pajamas until 9 o'clock, doing the first couple of meetings. But all of that stuff has an impact, and so some of your people that pick up from that, supermarket sales have gone well. Some of the little local shops around my area are really benefiting from more people in the neighbourhood. But on the flip side of it, people's eating habits, the hospitality sector, hotels are suffering from the lack of people coming through, and that's going to be an issue for a while. I mean, basically, until we can open up the borders, that's going to be a real challenge. It's just purely the fact that we're not getting 3 to 4 million people coming to visit and hang out for a weekend or a month, whatever it happens to be.
And how reliant is that domestic tourism and that growth on the wealth effect of housing going well and people feeling confident about things?
I think there's a couple of aspects to that. Firstly, if people aren't confident about their income, they put the wallet away, right? And that's been the thing which has happened over the past 6 months is some people have clearly suffered and lost their jobs. But the majority of people have still kept their jobs, and that's why the unemployment rate, or the flip side of it is the employment rate, haven't changed a great deal. And there's still more to play out on that story. But there's a lot of pent-up demand in the economy because we've been stuck at home. We haven't been able to have overseas trips. We haven't been able to get out, and people have just spent a lot less than what they normally would do. And so we've seen it. When things like Queenstown's opened up, there's been a lot of domestic travel down to go skiing over the skiing season. Things like car sales have gone incredibly well. People have had a bit more money to spend that they haven't been able to spend elsewhere, either because they've been locked up at home for those months or not been able to travel. In our household's case, both of my partner and I's parents live overseas, and so we'd normally travel to see them. And so we're all doing something different with our expenditure. So these things all flow into the mix.
I also think it's a little bit of it's been pretty tough, isn't it? And people are going, I'm just going to go and spend some money now. I don't actually think it's not just, I'm going to try and support the economy. Actually, it's been a bit tough. I'm going to treat myself. And I know we're doing that type of stuff now. We're just probably buying stuff that, we probably would have thought a little bit more about. We thought, what the heck, might as well.
Oh, and you're seeing it and with the housing as well. I think that other big driver is people have spent a lot of time at home, and so they now know, what is it about the house they didn't like. So I think builders are busy at the moment looking at, do you put an extra room on? Do you, do something in the kitchen? Because people have got the disposable cash because they're not going overseas to travel, and they realise they need to do something at home.
There was that really strange advert on the radio. I don't know if you heard it about lockdown. I've decided that my partner is not the partner for me, and there's all this sort of divorce lawyers popping up on. It's like, I've realised that lockdown is not the person I want to be with. Everyone's looking for an opportunity, isn't it? It's quite incredible.
Well, I'm an example of that turning out quite well, because my partner Sanai's a flight attendant, so and she lost her job in the lockdown. And so this is the first time in our 13 years or so that we've gone out that we've been under the same roof every single night, and I haven't been able to travel either. So I'm pleased to say we've survived it.
So it's going
well.
It's going well.
You don't need to phone 0800 divorce.
No. I need some help with the diet, because sitting at home eating and talking with each other. I don't know why she hasn't changed weight, but I certainly have.
Exactly. Now, talking of overweight people, Trump, the US election is it's upon us very, very shortly, and the New Zealand election happens, markets don't really move. But I think people sometimes they get a bit worried about US election, global economy. Actually, the result of this election could mean for all of us around the world. So, where are we at the moment? Because is it going to be a Trump or is it going to be a Biden? Where are you landing at the moment?
Well, the polls, just like they suggested Trump wouldn't win last time, are saying the same thing this time. But I think you'd be a braver person than me to call it a done deal. And I think that it's very likely that we won't know the outcome for quite a while. This election's a bit different. Usually in the States, like here, over the night following the polls closing, it's pretty clear what's going to happen, and a president-elect is declared quite quickly. There's examples where that hasn't happened, like the Gore versus Bush was an example. That went right until December, until Gore conceded. And so, and you do see more volatility in markets at that sort of time. Markets don't like that type of uncertainty, and there's a potential for a good month or so of uncertainty. I wouldn't be surprised if it's a close outcome, and whoever the loser is looks to contest the result. So this is the sort of stuff where we do expect a bit of volatility. To a certain extent, you just have to focus on the long term through it. Yeah. There will be an outcome, and there's quite a structured process for what they need to go through, who would govern if it's disputed and that sort of thing. Probably the big issue at the moment, and US markets it's about 5% off its peak running into the election. But I don't think we've known for a long time that this is going to be a confrontational time, and there's only going to be one winner and one loser. But it does get in the way of some important things that they need to do, like get another stimulus plan out there and make a plan for the economy whilst their COVID cases are on the pickup again. So this is where we're in a pretty good position here in New Zealand, where from a health perspective, I think we've done incredibly well. And the nuances we're debating are around taxation and growth strategies and that sort of stuff. Whereas in America, their political process can grind to a halt at times like this. And we've seen that over the last couple of weeks with them failing to agree across all the politicians on the next round of support. So that could drag on and for a while, and really that's been a feature of the 4 years with Trump. I recall the government shut down, and we had the run into Christmas where they were shut down for weeks on end, and that caused uncertainty in markets. And eventually what happens is the problem gets solved one way or another, and markets get on with it. So there's no strategy where you go, let's just jump out and stand on the sidelines while this carries on. Because markets could recoup that full 5% within a day if we get a clear-cut outcome, or they could be quite jittery for a month. If it's like the Gore versus Bush scenario.
But Trump's been good for share markets. You could if you look at the last 4 years, he'll say it's all down to him. But share markets have been Trump. I've done this. On the flip side, does that mean that Biden's going to be bad for share markets? Is it going to be we're going to tax people more? Corporations are going to make less money. Is that reality, or is that just sort of spin that we get fed?
I think there's a lot of spin. I mean, we had it here, right? There was a lot of scaremongering about the Greens have got this policy, and we're going to see wealth taxes and all that sort of stuff. You've got to have points of difference, but I'm a bit more of a historian. I think, actually, we can look at the last 30 years in American politics, and you can't say that the share market goes better under one party than the other. And you can read stuff that supports Trump, which is based around low corporate tax rates, cutting red tape, all that sort of stuff. You can read stuff that supports, hey, we'll get quite a lot of confidence if Biden wins, because we'll probably get more global cooperation. That's better for global trade, yada, yada, yada. So there's a positive spin on either candidate winning. The uncertainty's the bit, while you go one way or another, that I think will get markets a bit jittery. But just like we saw in COVID-19, I just don't think there's an investment strategy just because markets are coming up for a period of uncertainty, because as quick as they can go down a few percent, they can bounce back up just as quick once you get clarity around it. And it's not like we get an email saying, okay, the election's sorted out, time to invest again. So it's just one of those uncertain times that I've got used to, and investors on the whole get used to. It comes around every 4 years.
Exactly. And the last thing I wanted to touch on is, I don't really want to touch on COVID, because I think we've talked to COVID quite a bit, but I do want to touch on this sort of low interest rate environment, property market going up, and this sort of people still need to achieve what they want to achieve. So there's been a lot of talk about, I'm probably going to have to take a little bit more risk to achieve what I want to achieve. Chris, have you got a view on Is that the reality of it? Do I need, because interest rates are low, do I need to start taking more risk, or what are you hearing out there in the advisor world?
Yeah, certainly we are seeing people coming back to us as rates have declined, and as term deposit rates have become lower, people are rolling off longer term deposits that they've had. So they are seeing a noticeable decrease in income that they were receiving elsewhere, which has led them to consider what are the other options and what do they need to do, which in a low rate environment may well mean moving up the risk curve to source some further income. One of the things we're really focused on, though, is making sure that's the right decision. We have a lot of clients who are in term deposits, and they're in term deposits for a really good reason. Just because the rates are lower doesn't mean it's the right thing for them to invest into something else. But certainly we want to have that conversation because, it may well be the right thing for people to do. And I think it's an eyes wide open thing. If you understand the risks, you understand, the decisions you're making, and you're clear on why you're doing the things you're doing, then absolutely it's a decision you might want to make. I mean, where we get really nervous is, a bit like your divorce lawyer advertising during COVID. We're starting to see a lot more advertisements in the paper promising, low risk, high return products. And we've seen that in the past, and it just doesn't end well. People don't truly understand the risk they're taking, and it may be illiquidity. It may be, kind of very fat tail end risk around the likely return of capital of a product. We just want to make sure people really understand the risk they're taking to get any additional return, and making sure they're making the right decision for their goals and their needs.
Yeah, that's really good advice. And I suppose the same, you're speaking about interest rates and even negative interest rates, Chris, and that seems like a reality now, doesn't it?
Yeah, well, within the New Zealand bond market now, we're seeing government bonds out to 5 years have traded with a negative yield, which just seems amazing. And people think, well, who would buy a bond with a negative yield where you get less money back in 5 years? Well, the simple answer is the Reserve Bank will. They're buying a significant chunk of the bonds that are out there in the market. So that's a feature now and something that's going to be part of the landscape. And the only offset to this, and when I'm chatting to people and they say, what should I do, is you have to have a really decent think about the time frame that you've got to invest, because the strategies that make money, which often involve more exposure to growth assets like shares, are not for the here's a thing for 1 year or for 2 year. They're 10-year sort of strategies. So for people that have got that sort of time frame, I think it's really good. The people I really feel for at the moment is people that can't afford to take those risks. People that are well into retirement and are really in that income space. We saw that in our investor confidence survey that just came out this week. Was the older groups were way less confident about the outlook and pretty negative on the outlook. And I think that is the thoughts about bond yields being so low, this talk about negative official cash rate, term deposits now 1% or lower. It's really tough on people looking to get a really conservative strategy because it's the conservative bonds and conservative term deposits that are getting impacted by these low rates.
And we really are seeing that. We're starting to run the wealth seminars that we've had in the past, and I'm sure we've talked about on the podcast. And we're seeing a lot of people come in with questions around negative rates, but really the fundamental question is, what should I do with my money, and how do we help people, in periods of uncertainty and with their long-term plans. So, and that's just being escalated as rates have come down.
I think you did right. I think what you said, Chris, was really relevant around, like, you don't need to do anything different apart from maybe have a conversation with someone and actually sit down and find out what, and you're really good at this, Chris, talking about, what's your plan? What are you trying to achieve? What's the term you've got? Because one of the things we learned through COVID was people reacted, and you can understand why they did, but actually the people who did nothing actually came out really well through that whole situation. So it is that sort of, have a plan, focus on it and stick to it. It sounds really boring, but actually works every single time. But
that's economist prudent but boring.
Exactly. Okay, I'm going to finish with two quick questions. So we've got an election coming up, and we've got COVID. So just quick fire question to see if you can actually. We're going to go Trump or Biden. Who's going to win? Chris-Tennent Brown?
I'm pretty much hoping that Biden wins, so I've just got less to write about over the next couple of years.
Okay, Chris Wilson?
I think Biden gets there, but it's going to be very tight as well. Yeah.
So you're both on the fence. Okay. Vaccine by Christmas?
No, I don't think it's going to happen.
No, that's all election talk, I think.
It's all election talk. Okay, guys, thank you for coming into the booth. It's been great to be back, and thank you for both having the same name. It's been a lot easier to just say Chris and just look at you. So thanks for that, and we'll look forward to find out what happens in the election very shortly. Thanks a lot.
Thanks for having us.
Thanks, John.
Thanks for joining us today on the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on future shows, please fire your suggestions through to podcasts@asb.co.nz.